The headline reads, Los Angeles insurance giant makes chilling prediction after devastating fires. Now, it's kind of what everybody's thinking. What is going to happen with insurance in California? Is it going to affect me? I live in another state. I'm not even close to the wildfires. The answer is, yeah, it's probably going to impact you. How much? That's the question. Let's get into it. Here we go. So we've got a California home insurance CEO last week said that the inability to insure homes amid the ongoing wildfires burning thousands of acres would completely upend the state as it looks to rebuild. Inability to get insurance. Now, we've had multiple insurance carriers in California just basically pull out, hey, the risk is too high. And the way you guys have your laws set up, we're not able to charge premiums commensurate with the risk. That's a super, super simplified version. There's a bunch of nuances to that, and we're going to get into some of those. But the bottom line is insurance companies are saying, wildfires, which have been happening on the regular, and we're going to insure you, and you're going to make sure that we can only pay this much when we need to be paying this much to stay in business and make a profit and all that other good stuff. Nope, we're out of here. We're gone. To the point where FAIR, which is a state-run insurance program, because all the private ones are pulling out, your State Farm, your Farmers, they're all just, no thanks. You've got this massive run on a state program. What if the state program, FAIR, what if that goes sideways? What if that becomes insolvent? That's what we're talking about. Just as homes are trying to be rebuilt. That's going to take years to even get a permit here in the Golden State. But insurance is such a massive, massive component of this overall puzzle. Mike Zuckerman, CEO and president of the third largest home insurance company in the Golden State, CSAA Insurance Group, issued an unsettling statement regarding insurance availability. Zuckerman, unlike other companies who have stopped writing policies or refused to renew customers amidst the raging fires, believes that the state and its wildfires are still insurable. The question is, how much and how much coverage am I going to get? If you don't know, if you're not a homeowner, don't really care, okay, that's one thing. But if you want to go buy a home, if you have a home, you've got a mortgage on it, that lender is going to require you to have homeowners insurance. So this whole notion of, it doesn't really impact me. Your insurance policy is through some insurance carrier, whether it's general liability, your car insurance, home insurance, renter's insurance. Those all get spread out over just a handful of companies. So you might say, well, not ours. Yes, yours as well. So what is happening here is kind of just this micro picture of what could happen to the rest of the industry. And that's what everybody's thinking is, even though it's just California that's burning up here. And then we've got, you've got other states as well that have had some New Orleans, major issues. Hurricane season, right? Every year. It's hard to think about the answer to that being no, Zuckerman told the San Francisco Chronicle. With the Palisades and Eaton fires far from containment, Zuckerman acknowledged that it's impossible to know exactly how the insurance industry as a whole might react to the fires. This is going to take a long time to sort out. You got to figure out, okay, how many homes we got to rebuild here? What are the costs? Because those costs are going to absolutely skyrocket because you don't have enough contractors. You're going to have contractors coming in from Mexico. You're going to have contractors coming in from all over the place to rebuild Los Angeles. And these are expensive homes, right? This is not, $300,000 entry-level home. It's multi-million, and the cost to construct these is just literally going to go to the moon as we progress through this rebuild process. However, the insurance giant claimed there is no alternative to having home insurance. And that's why we're talking about this. That's why this is so critical. Insurance. And even for the insurance company, reinsurance is a huge deal. All right. How can we spread out the liability to some other companies here? I don't want to take all this liability on. We got some fires coming and they're not doing a lot on their wildfire management. And now you've got the issue of, did you have enough water? And you're going to have investigations. You're going to have all kinds of things. In the meantime, you got to have these homes insured. And in California, insurance companies have been pulling out literally left and right to the point where they restructured a deal with the state of California as of January 1st, kind of rework things so they can get some more insurers in. What happened here in the wildfires is a massive stress test to the new regulations set in place January 1st. Literally 8 days later, you've got a huge stress test. All right, we'll see how this goes. We'll see if these insurance companies want to stick in the game or not. I don't think there's an alternative for us as a society and as far as an industry and as people. Not being able to insure homes in California against these kinds of risks would completely upend the state. Period. Just goes sideways because you don't have the ability for people to buy homes in these areas. People aren't going to want to rebuild their home. Can you get insurance? No. Your mortgage lenders aren't going to care if your home built down or not. They still require you to make that payment because a deal is a deal. You might get some kind of abatement for a while, kind of like the Great Recession. You were able to, let's put your home on a 40-year mortgage, even though you only got 17 years left, something like that. Or, mortgage companies are going to work with people because they don't want these loans to default and go on their books. But insurance companies, they've already been in the process of saying, no, I don't think so because of this, and this reason, right? Over the last few years, many California-based insurance companies have cited the risk of costly wildfires as a reason to stop writing new policies, decline renewal for customers, or even leave the state altogether. There was at one time, I think, 12 major insurers. That list is down to 5. And the fair insurance, basically state-run policy, they have been writing policies left and right because, number one, people who can't get insurance because they're literally in a fire zone, that's who they have to go to, a high-risk state-run, and it's more expensive and it's less coverage. However, CSAA continues to write new policies in the state and renew the vast majority of existing ones. Zuckerman said that CSAA did not renew about 5,500 policies, 1.2% of its total policies in the state, due to wildfire risk in 2024. However, he added that the company's cancellations are not a sign that wildfires aren't insurable. It's a sign that insurance companies need to be allowed to charge the prices that match the increased risk in order to insure. In 1988, California enacted Proposition 103. I'm going off memory here. And it basically capped the increases that insurance companies could require people to pay on renewal. And so what that did is that it limited how much they could charge. And you've literally got, in Joe Biden's America, you've got inflation that has just gone to the moon, right? So you've already got costs that have, just exploded, and the insurance companies haven't been able to keep up with their premiums. And the process in California is so difficult to get the premium increase through the state that the insurance companies don't want to take the risk in the meantime, and they don't want to cover that risk. And so in the meantime, they're saying, we'll go somewhere else where we know that the odds are better in our favor. Starting this year, California Department of Insurance will allow insurance companies to use wildfire catastrophe models to inform new pricing. This is the deal as of January 1st, California struck with the insurance companies. Companies will also be able to pass some of what they pay for in insurance for an insurance company to their customers under the new policy, spreading out the risk. This is all legislation California put in place to protect their consumers. And now it is absolutely biting their consumers in the ass because they can't get insurance. And maybe you're one of those people that are sitting here going, God, that is me. That sucks. But it has to do with risk, right? And if you're close to a fire zone, not good. Such reforms recognize that climate change is increasing overall risk, something Zuckerman feels insurance companies need to be able to cover. So here's a good question. At what point does it become non-viable? Does the price become absolutely non-viable relative to the risk? Well, I think during this little process, we're going to find out, right? Just how much insurance prices will increase has yet to be seen. However, experts say that an increase could exacerbate California's affordable housing problem. Oh, man. I mean, you bring a bunch of illegals in, you have no housing to begin with, and you have a massive fire in an area with wealthy people who can pay $50,000, $60,000 a month in rent. You think it might have an impact on housing affordability? Absolutely. Zuckerman CSAA raised its home insurance rates by 6.9% earlier this year, though others like Allstate and State Farm have raised them by double digits. That is just to keep up with their exposure, with their risk. Otherwise, they're going to say, yep, nope, we're out of here. We are not doing this. And that is what has happened with many, many people. And that's why California had to create the FAIR deal. Los Angeles fire losses could reach $30 billion for insurers. That's the number we care about. Because total number, well, people didn't have insurance on it. Oh, tough luck. You want to rebuild? That's out of pocket. So after accounting for non-insured damages, the total cost will balloon to $40 billion. The report said, we don't even know yet. We have no idea. I mean, what they're basically doing is they're going, all right, we got 1,000 homes, $3 million a pop. That's literally what they're doing. So therefore, it's going to be this. And how many have insurance? Well, it's going to be this. Ongoing fires, according to analysts, appear to already be the costliest wildfire event in California history. Fire forecast would make the fires one of the 20 costliest natural disasters in U.S. history. And this insurance issue has been ongoing for years. I've covered it multiple times because it's like, what's going on there? And, you know, it's always one of those things. Why is the insurance being pulled? Because the insurance companies are basically odds makers and they say, this isn't a good gamble for us to issue this policy. Sorry, folks, we're done. You're going to be left to your own devices to insure. And like we talked about earlier, there is no replacement for insurance. You can't go to a Model B because there isn't one. You've got to have insurance. You want to take out a mortgage? You got to have insurance. If you want to rebuild with your own money out of pocket and not have a mortgage, that's fine. But you want to do that and not have insurance? You want to put $3, $4, $5 million into a home and just risk the odds that I don't think a fire will, come through here again in my lifetime. You want to roll those dice? Well, maybe you do, but the vast majority of people are going to say, no. Because they want to have their assets covered, right? So you're seeing so much with the insurance focus on climate change, because that's what we're going to blame. The left wants to blame this on climate change and not on wildfire management policy, not on, hey, you allowed all these homes to be built in known wildfire zones. That's going to be expensive to insure. How about just facing the reality there? That's a thing as well. Here's a good example. Industry unrest roiling the insurance market in California demonstrates the role climate change has played in skyrocketing premiums and struggling insurers, some experts said. Yeah, well, you insured in a known area, and that is why so many insurance companies have said, no, don't play that game, right? Average home insurance price jumped a staggering 43% in California from January 2018 to December 2023. You guys tell me stories all the time. My homeowner's insurance is this. My mom just had her policy canceled. Had the same house for XYZ number of years, and my insurance just went boop. That's why we're talking about this, because this is going to have a massive impact just in general, because insurance companies got to stay in business. Love them or not, nobody loves insurance, right? It's like, got to pay, a small premium or a big premium for something I already got. This sucks. But if you don't have it, you don't have it. And That's what so many people are being faced with right now. Another recent article, one was this is in the 10th. California wildfire disaster, state's insurance industry could see catastrophic failures in the coming days. This is all speculation right now because we don't know what the true impact is going to be of these numbers. But the fact that so many insurance companies have already pulled out, they already basically told California, you're not a good risk. Los Angeles in particular, you're not a good risk. Article basically states, since 2019, more than 100,000 Californians have been dropped from their insurance carriers as the region sees more frequent and intense wildfires. According to San Francisco Chronicle, insurance companies there have been raising rates, canceling or non-renewing or leaving the state altogether. And it's been that way for a long time. What's happened in California is beginning well before these fires. State Farm and a number of other insurance there began to drop policyholders saying, and this is about a year ago now, their risks were too high for them to remain solvent in the state. Just to give you a feeling for what that means, out of the 12 major insurers in the state, at least 5 have pulled out completely or stopped writing new policies. 5 out of 12. You're down to just a little over 50%, right? Let's talk about the FAIR Act, FAIR Plan. Established after a series of wildfires in the 1960s, FAIR Plan charges higher rates than private market insurers and offers a maximum payback policy, $3 million for residential policyholders and $20 million for commercial. There are now roughly 450,000 FAIR insurance policies across the state, more than double from 2020. Los Angeles Times also reports that the program is dangerously overextended, accountable for roughly $300 billion with only $200 million in surplus coverage. So everybody's looking at these insurance companies going, oh, what do they got in reserves? What do they got in reinsurance? What do we got going on here? Is this going to fly? That's the question of the hour, right? It will be a challenge to rebuild. Should loss claims exceed FAIR's reserves, those private insurers still operating the state will step in to cover the first $1 billion in shortfall. So that is with the FAIR Act, they will offer, it's high risk, high premiums for lesser coverage. But if they run out of money with their insurance, then the private insurance come in and it's a pay to play. Hey, you want to offer policies in our state? That's fine, but you got to cover up to $1 billion. These are the deals that they make that folks just don't know about, nor do they care about. But this is what impacts things because they go $1 billion in shortfall. Private companies got to pay that. Aldrich notes that even if FAIR program is able to reimburse its policyholders, homeowners will face an uphill battle to build. We've had 10,000 homes so far that we know of. I think it's closer to 12 or closer to 13,000 burned down the Palisades at a payout value of only $3 million per home. Let's say that California FAIR actually manages to pay out these insurance policies. The rebuilding cost is going to be much more than that, much more than 2.5 to 3 million. Why is that? Because post-shock, after these fires, labor market and materials market gets slammed. Many homeowners in the Palisades are going to want to rebuild their home in the next few years, which means every contractor is going to be tapped. It's what happened in New Orleans after Katrina. So the prices of labor and the prices of materials like wood and steel will shoot up through the roof. So as a result of the damage starts to become clear, we may see some catastrophic failures, meaning insurance companies, both from pullouts of firms still in operation and also bankruptcies and failures. So hundreds of local small firms across Louisiana go bankrupt after Katrina, because they simply weren't prepared to offer payouts from the damage. It's like you got to get a massive lawsuit, filed against you. You get a massive lawsuit. What do? File bankruptcy. Cannot pay. Do not have enough assets to cover my liabilities. Banco. Does the government step in to bail out? That's another great question, right? Hey, let's just see what happens with the insurance companies. Now, insurance companies typically don't get bailed out. Have they ever been bailed out on a scale like this? I know banks sure have. Man, how many banks got how many CEOs just absolutely got bailed out? And I remember FIREA back in the day, Financial Institutions Reform, Recovery, and Enforcement Act of 1989. That came on the tails of the S&L crisis, right? Let's do a big bailout because too big to fail, right? And that came later. So these insurance companies, you're going to see some stuff get absolutely rocked because there already wasn't enough coverage. And what coverage there was pre-LA fires 2025, you're going to have those insurance companies going, we're going to need to reassess your risk. Yeah, meaning we're going to need to reassess you having an insurance policy with us. Then you got the state, step in and saying, no, you got to insure them because otherwise it's going to be a mess. It's already a mess. And the fires aren't even done. So stay tuned. Love to have you subscribe, do all that good stuff. I'll see you on the next one. Bye for now.